Good morning, everyone. For the record, it is October 28th, 2021, and this is our ongoing business development advisor training. We do this every week. Today is, we don't have a carrier. This is the odd week. So next week we'll have another carrier come in or technology or service. So this week you all get me. And today the focus is going to be on, depending on time, we may go into a few things, but the main focus is going to be independent insurance distribution is kind of going to be the title, and how it works with different channels. So I made a pretty diagram that I'll share with everyone because one of the things that I've realized, especially as we've been talking to more can get on more AMOs and other agents and agencies, is how often agents and agency owners do not understand wholesale distribution and how the independent insurance distribution actually works. So I figured I'd make something a little bit nice for everyone that you all can utilize, and I'll share this with everyone. It will go in the band group and resources. And then we can tweak it and do other things. But I think this is going to be helpful because I've had to draw this out quite a few times now at this point for other people to explain how this side works. As a question to everyone, because again, just to address how these meetings go, especially at this time, again, this is meant for you to ask questions. At some point when we get 20, 30, 40 people on, we might have a little bit different format, but with a small group like this, if somebody has something that they want to clarify or ask about, then just interrupt. You don't have to put in the chat, just unmute yourself and say, hey, I have a question. Don't be afraid to do that, because that's what this is designed to do, is give you all information so that you can utilize it in talking with agents and agencies to earn their contracts. So again, don't feel bad to interrupt and ask the question. But on the note, let me ask everyone this, and Jeffrey, this would be a good question for you too. So if for those that don't know, Jeffrey is the eldest in the insurance world. He's been doing this, and I mean this in all level of respect. I mean, Jeff, you've been doing this for 50 years. So he knows a lot. He's seen a lot of changes in the industry. But as a group question, let me ask within this context, based on your experience in the industry and what you guys have talked about, what you've seen, and Jason, you've been 17 years as well, talking with agents and agencies. On a scale of 1 to 10, how familiar do you think agents and agencies are with how insurance distribution works? So scale of 1 to 10, 1 being they know nothing and don't understand it, and 10 being they know exactly how it works. Where would you say that's at? And Jeffrey, I'll let you start.
I would say 7.
7. That's generous. We'll get back to that. Debbie and Jake, I'll let you guys pass if you want to, since you're learning the industry. But Jason, what would you say on understanding insurance distribution, scale of 1 to 10? What would you say about how they know that works?
I mean, insurance distribution, I guess I really don't fully understand the question. I know this. Most insurance agencies are just a cluster. I mean, it's absolute chaos. They don't even understand to call their own clients back. Most of them. They don't. They sell one thing one time and they move on. They just get that one sale. Distribution. Most agencies I've worked for, I feel lucky when they put on their shoes.
Yeah. And so I suppose to clarify what I mean by insurance distribution is, well, where do they get their contracts from? How do the contracts work? Where are different locations they can get contracts? Things like that. That's what I mean by distribution. There's carriers, and then carriers have a means of distributing those contracts.
One of the main guys I worked for almost 7 years, long after I worked for Clyde, we went back and we analyzed that. That man paid $40,000 to access his carriers.
Yeah.
$40,000. And you could see it later in his career that he started buying books and balancing debt because he just couldn't keep up with that. And eventually wound up selling his book and merging with another company.
I know the story. Well, I'll leave that there. So, I mean, it depends. It's kind of varies all over the place. Ross, I keep on seeing your face and then you leave and then come back and you leave and you come back.
Sorry, I've had quite the morning. Just getting situated here. Good morning, everyone.
No worries. Good to have you on. So, Ross, I know you're kind of jumping into it, but based on what you understand about insurance distribution scale of 1 to 10, 1 in agents and agencies know nothing about how that works, 10 being they understand completely how it works. What would you say that most people in the insurance world on a scale of 1 to 10 know about insurance distribution?
4 to 5.
With that. And then Jody, I'll let you chime in too, because you have lots of experience. Insurance distribution scale of 1 to 10. What would you say agents know about that?
I guess it depends on their level and where they're from.
Also true.
It could be 0 to, I'm not going to give a lot of credit. I'm not going to say 10, but somewhere in the middle.
Absolutely. And I would agree. So, hey, G, it's good to have you on. I know you're probably going to be in listen only mode, but glad to have you here as well. And you're absolutely right. So, I mean, I won't ask Jeff in explaining his 7, but regardless, no one was able to say with any level of confidence that they're like at a 9 or a 10. Insurance distribution is one of the most kept secrets in the insurance industry. And no agent is taught how that works at the beginning. And because they're all taught from the perspective of the agency that recruited them. And depending on how that agency works, if it's a captive agent, well, they're going to teach them that the captive agency model is the one and only best model that you can operate by. And they're not going to say, well, there's captive agents and then there's independent agents and this is how it works. And here are your options, Mr. and Mrs. Agent. Oh, perfect. Thanks, G. I was trying to figure out who that number was. So that's you as well. Awesome. But like I said, no one has the option to go through that and actually understand, okay, well, which direction is going to be best for me? They're recruited to an agency, and then whatever that agency teaches is what they're going to learn. So people, and we just sat down with someone yesterday, and he's been in the business since 2008. So he's been doing this for 13 years, and he still did not understand how life insurance distribution worked. And he's mainly a PNC shop, but he had no idea that there was a difference. So I'm setting up the stage because I think this is important. And Jeff, you're probably at like a 9 or a 10 of really understanding that, just because you've been in the wholesale distribution side before. But for those that haven't been in that, it's a confusing world. So I made a pretty diagram. Hopefully everyone can follow along with me. So hold on, let me pull it up and make sure everyone can see my screen. All right, so just a thumbs up. Everyone see my screen? Awesome. All right, so independent insurance distribution. Made a pretty chart. So this is something that you all, like I said, I'm going to PDF this, and then you guys can all use and what this looks like. And I'm going to go through this in different channels. So, and there's 3 main channels of distribution that we talk about. You have life and annuity. You have health insurance, and which includes Medicare as well, and some things like like LT, long-term care, and disability insurance. But health insurance is the larger category, and then you have PNC. So property and casualty, that's auto and home insurance, commercial insurance, things like that. Now, we're not going to talk about this because it doesn't directly apply to what we're doing. I apologize, hold on 1 second. But the other piece of that too is going to be the financial side. So, which is broker dealers, money management, all that good stuff. We're not going to deal with that and how distribution works, but these are the three main categories that we're going to work with. So just to explain the pieces to everyone real quick. So we have those categories. Then up here, we have the insurance carriers. So the insurance carriers, of course, are the ones distributing products and services, are the ones that create products like life insurance and annuities and index universal life, term insurance, fixed index annuities, health insurance, so individual health, ACA plans, short-term medical plans, Medicare Advantage, Medicare Advantage, Medicare supplements, PNC, auto, home insurance, commercial insurance, et cetera, et cetera. I'm just giving examples of some carriers so that we can fill in the blanks, but there are tons of carriers, and us specifically, we have access to about 100+ different carriers in these. These are called, I'm going to call them vertical marketplaces. And so there's a lot of different carriers. Here's some examples. Now, this is a very basic diagram of, in the insurance world, you have organizations that act as the middleman. So these places are basically called wholesalers. So you have insurance marketing organizations, so IMO for short. They're also called FMOs, so field marketing organizations. I know some of this we've gone over, but I want everyone to get on the same page with this to be able to use this language. Jeff, hopefully I don't bore you to death. And then in the life and annuity field, all of these, well, excuse me, let me take this back. This whole category, these are the wholesalers. So they're the people that take the products and service and distribute that to other agents and agency owners, basically. Agents, agency owners, things like that. And in the life and annuity space, they're traditionally called insurance marketing organizations or field marketing organizations, FMOs, IMOs, BGAs, MGAs sometimes, but IMO is the most popular in the life and annuity space. In the health insurance world, they're sometimes called IMOs. A lot of times they're called brokers as well. That's probably the most traditional language that's used for these type of wholesalers. And in the PNC space, the wholesalers, they're usually called aggregators or brokers as well. So different language and different terms that are being used, but they all mean the same thing. They are wholesalers that are taking the products and services that they get and then distributing it to agency owners and agents and things like that. For our purposes, I'm going to get rid of this. So does that make sense to everyone so far? So that's the first layer. Now I'm going to say this. More often than not, depending on who you are and where you're getting your contracts from, some people may not be 100% familiar with the wholesale side of where they're getting contracts from. They might know the terminologies. Now, what makes this more confusing is you see these red lines. So what they say is direct appointments. So direct appointments means that the agency owner or even the agent is getting a direct contract with the insurance company and there's no broker in between them. Now, on the life and annuity side, this happens almost never, where someone's getting a direct contract with the carrier. It's happening less and less. Insurance carriers are pushing for agents to work with IMOs so that they can reduce the amount of employees that the carriers have to have in-house. So that's on the life and annuity side. Most distribution happens through IMOs and wholesalers, which is why agents and agency owners that have life insurance and annuity contracts already usually understand the language of IMO and wholesalers. So that's already apparent to them. Health insurance, I would say, this is not a great statistic. This is a made up statistic, but 60-40, 60% of the time they're going through an IMO. And then there's lots of places that still have direct contracts where they're directly getting contract with National General and there's no broker or wholesaler or IMO in between. So that's on the health insurance side, but there's still organizations that are out there that do that. And it's happening more and more as well in the health insurance space where people are going through IMOs and brokers to get those contracts. Now, here's where we separate the line. And this is why this is an important conversation to have, because a lot of the people that we talk to are P&C shops. They're auto and home insurance agencies. Auto and home insurance agencies typically do not understand this world at all. Like at all. Let me stress that. They do not understand insurance distribution and how it works with health insurance, life, and annuities. And here's the reason why. So on the property and casualty side, everyone in this case wants to get direct appointments with these type of carriers. It is the goal of P&C shops to earn a direct contract. Now, here's the struggle with that. Can anyone, I know a few of you don't know this, but does anyone know why P&C contracts are harder to get than life, annuity, health, Medicare contracts? Ross.
Most of PNC is captive agents.
That's one, absolutely. Anybody else? What's the reason that P&C contracts are so hard to get? Jake?
Because it's a combination of not only do you have to have specific production met, you then have to have actual proof through historical information to show that you have that production and will maintain that production to get that business direct contract.
That I would, yes, absolutely. Ross. There's some other minor reasons, but the two things that you said are most important. So Ross, captive agents, absolutely. So to get a farmer's contract, you have to go to Farmers. To get State Farm, you have to go to State Farm. You have to basically apply. If you want to run an agency, you have to put up funds and things like that. So in the captive world, that's hard because there's a process to do that. In the independent world, it's even harder because the reason that people go independent is because they want to have multiple carriers so they can take multiple risks and be able to write the clients that they weren't being able to write as a captive agent. So that's why on that side, what Jake said is so prevalent, because in the independent side, here's the line, unlike life, annuity, health, Medicare, all these other products and services, if you have a license and you can fog up a mirror, they're going to give you a contract. That's the requirements. I suppose I'll throw in one of the, and then you don't owe any other insurance carriers any money for chargebacks and things like that. On the P&C side, though, to get a contract, like Jake stated, you have production requirements. And usually they're $250,000 of premium for the year. So if you have 4 contracts, that means you have to have a business plan and proof that you have been on a run rate to be able to hit that number of $1 million in a year. And if you don't have a business plan and you don't have proof, and if you even get the contract and then don't get those production requirements, they will drop that contract and you will lose all your clients. So that is a big deal in the PNC space of why agents and agencies don't have a struggle getting direct contracts. All right, now here's the other thing. We're going to use some easy math, but let's say top level contract, 35. So, all right. So, and all right. So what I'm putting at top is the first year commission that that you would get that is possible at the top level of the insurance distribution. So, in the life and annuity field, that is typically going to be between 130 and 150%. That's how much organizations like IMOs are getting from the carriers. 35, 50%. That's really I'm going to put that right there for right now. That's really on health insurance and Medicare. That's like top level contract. That's in some cases that's going to be even too high. But there's a little broader range because there's a lot more products within this. So that's health insurance. That's top level contract. In the PNC space, I mean, you could get a little bit higher depending if you're writing a commercial case or things like that. But I'm just going to say for easy math, it's about 20%. All right, everyone tracking with me so far? All right. So in the life and annuity space, 130, 150%. No agency nor agent can ever get this, period. They can't call up AIG and be like, hey, I want to write a contract with you guys. And I heard that there's this like 130, 140% contract. Can I get that? And they're going to be like, well, have you done $5 million, $10 million of production?
We may lose power. Just a heads up.
Thank you. Heads up, everyone. What?
Includes Wi-Fi.
Gotcha. Just a heads up. There's a potentiality that we may lose power here. So if all of a sudden I cut off, everyone knows why. I'm going to jump on a hotspot in case that does happen. So just give me like a minute or two if we lose power. So just heads up.
Jeff, have you already lost power? It's looking mighty dark over there.
Let's leave Jeff alone.
I'm sorry.
All right, so 130, 150%.
I'm waiting for my commission statement so I can pay my bills.
Wow. I think that's a Nathan problem. That's
Oh
what Nathan's
no.
got to take up.
Oh no. Oh, that's awesome. All right. So giving back 130, 150%. No agent or agency owner could ever get that level. Because to get it, they have to prove, okay, I'm bringing over to this carrier $5 million, $10 million of production. And no one agent or even a small agency owner can do that by themselves. It's impossible. So that's why in the life and annuity space, IMOs get that contract because they're aggregating 100 agency owners, 1,000 agents, and bringing together all of their production to achieve those higher levels of commissions. And on the, so then agency owners, to put in numbers then, they're usually probably anywhere between 100 to 120.
210.
Yeah, 210. I would say. And this all depends on each insurance company and carrier and product and things like that. So I'm using really broad stroke numbers. And then agents for life and annuity are usually getting anywhere between 80 to 100%. All right. So that's how life and annuity distribution works. And the reason that IMOs are getting this. Oh, what's sorry about that, guys, and gals. What the reason that insurance marketing organizations are getting this is because they're providing support for the agency owner and the agents, usually doing like new business support, contracting support. They're going to run them quotes and illustrations and all that good stuff. Blah, 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 et cetera, et cetera. So that's why they're earning that. The agency owner is providing training. Sometimes they're housing the agents. Maybe they're providing leads. So there's value that's provided in each of these hierarchies. So same thing with health insurance and Medicare is, let's say that 35, 50%, a agency owner maybe is getting 25 to, I'm going to give it the top level just because there's actually some more room, but hopefully you're getting the idea. And then depending on product and service, 15, 25%. Same thing, support across the board, blah, blah, blah. Now, PNC distribution though, that 20%, and let me explain it this way. This is above street level contracts, which means an agent can call AIG and AIG is only going to give them between 80 and 100%, no matter what. There's going to be no production requirements. They just have to have a license, fog up a mirror, and have no debt to the other carriers. So they can get that contract. So it doesn't matter if the agent on the life and annuity side goes to AIG and gets the contract, which they probably won't because they want to do it out through IMOs. But it doesn't matter if they get a direct contract or if they get it through the insurance marketing organization, they're typically going to get about the same contract level. So they might as well go through an insurance marketing organization to get the same contract level, but from the insurance marketing organization, they're going to get the big word here, support. Whereas AIG or Allianz, if you got it direct, they're not going to give you direct support. They're just going to give you a contract. So that's why it's important for agents to go through IMOs. And I know this is super basic, but I think this is important for everyone to get on the same page about. And also too, this is recorded. So leverage this. If someone's like, well, how does insurance distribution work? This is still good enough to be able to for them to talk about. And for all those that are listening to this as agents and agencies, I'm sure that no one else is going over this in any capacity and helping you understand how insurance distribution works. If you have more questions about this, feel free to ask any of the people that are on here and get in contact with us so that we can help you and put you in the right place, basically. All right, there's my disclaimer. In the health insurance field, same kind of thing. Is typically if an agent or an agency owner calls National General, Philadelphia American New Era, United Healthcare, they're going to give them a street level contract. They're not going to be able to get above that because they haven't earned it with production. So again, the IMO is not taking anything out of the agency owner or agent's pocket because the agency owner and the agent can't even get these levels. Like they have to be doing way too much production. Now in the PNC space, there is no such thing as an override. There's no such thing as a spread. If an agent or an agency owner has a direct contract with Erie and Erie's commission level is 20%, well, an aggregator that's doing millions of dollars of production is not going to have a different contract level than the agency owner. They're going to still have a 20% contract. That is a huge important differentiation. So did everyone get that? So life insurance, annuity, health insurance, Medicare, there is overrides and spreads above what agents can get. And we're never taking any money out of the agent's pocket to provide support. In the PNC world, to get the contract for an agency owner or an agent to get these contracts, they have to give up some of that 20% to be able to get the contract through an aggregator or broker. And usually what happens is the aggregator or broker is taking anywhere between 10 to 30% of 10. Wow. There we go. 30% of the 20%. So,
Driven down so low where the agency's only getting 7%.
and there's sometimes they're taken higher. And like if you're going through a broker, that's maybe only, I mean, I'll say this, 10 to 50%. So on the top end, 50% of 20%, that means that the agency owner is only getting 20%. And if they're working with an agent, that means that the agency owner has to earn something, which means that the agent may only be getting like 6, 7, 8%. And the agency owner is only getting like 10. So they're getting like 1 or 2% basically. But they need that contract. They need to write that risk. And they can't get it any other way. So they have to go through an aggregator or broker. And that's why in the PNC space, their goal is to get that and earn that direct appointment at some point. And they're not going to be able to do it for all their carriers, but they do want to try and do that at some point, because then they can eliminate this and earn all of that. So this is important for everyone to understand, because, and more so, it's because if you haven't gotten the hint already from the way that I'm talking, this is mainly for and to explain to PNC agents and agencies. Most of the rest of the world is going to understand this to a certain extent. But, sorry, go ahead.
I was gonna say, but however, most of the rest of the world is smaller, correct? Isn't PNC a larger portion?
Not necessarily, not in essence of licensed agents.
Okay.
It's just PNC is they're more obvious.
Okay.
They're easier to find because PNC is required by state law. Like you have to have it. All of these products you don't have to have. So not as many people are looking for them. But in essence of licensed agents, I'd have to look at the number. But I wouldn't say it's completely lopsided.
Sure.
But the difference being is, like I said, PNC required by law to have. So every person and their mama has to find a auto and home insurance shop to get coverage. Whereas they do not have to do the other side.
Right.
So these products have to be sold. This product just has to be, someone has to get. Ross, you unmuted yourself. Comment, question?
Riddle?
No, I was just simply gonna say, yeah, I mean, PNC you have to have, whereas life and annuities are an option.
Yeah, exactly. And that's an important differentiation to make as well about how their business model works too. Because these people are typically not, I wouldn't consider them as much salespeople. A lot of times they're order takers. And I don't mean that in a bad way at all. They're phenomenal. And there's some great ones. The great PNC shops have customer service and they sell and they're able to do other things. Whereas these people on this side, all these people have to sell. Like they have to create value in what they're doing and explain and educate clients about why they should even have the product or service that they're trying to offer. Because as Ross so eloquently put, it is an option. It is not required. All right. I'm gonna take a breather for a second, because that's a lot of understanding that. But any questions or any clarifications on what's happening in this type of diagram? I'll ask this then. So especially for the ones that have been have experience, I'll ask the experienced one first. Is a diagram like this useful for you to have in your back pocket in case someone needs an explanation of how insurance distribution works? Do you feel that it could be? Because like I said, if we need to change some things and move some things around and make it a little bit different, let me know, because I think something like this would be good and helpful, but we want to make it the best way possible, basically. Yeah, Ross, go ahead.
So I have a question. If, let's say, for example, we're speaking to an agent, is this something like, how much of this can we disclose to the potential clients as we're pitching them? They're like, well, how does this really work? How do we actually get these sort of numbers? What all exactly are we allowed to disclose to these agents?
All of it. So,
Okay, so we could basically show them this.
yes.
Okay.
This is designed that, like I said, I'll have it in a PDF. I'm going to put it in the resources. You guys can take this, use it, write on it, draw on it. If you have something like this, so like Miro, this is free to use as long as you're only doing 3 boards. Like I can share this, and you can add this on this if you want to draw something out like this. And like I said, full disclosure, we are a 100% transparent shop. So helping them understand how the back end works. I have always found over the years of me doing this that the more transparent you are, the better someone is going to work with you, because no one, and I'm making broad statements, but there is really no one out there that is actually teaching this kind of stuff. Like they're not showing how distribution works and explaining these aspects. Now, you shouldn't have to explain this as long as I have. Like this is an hour, basically. The idea of what you're doing is, yes, we want to be education driven and process driven and things like that. But you also want to earn the contract and not have to waste your time on someone that is clearly not going to do anything with you. So understand that. But I think this would be a good tool for everyone to use. Now, let me go to the new people. So Jake, Debbie, and G. I don't know if you, yeah, I think you should be able to see this, but if you have time to chime in, was this useful for you to understand how the back end works? And let me say this, actually, one other piece so that I can fit in you. So this is kind of where you fit. And it's a little bit more of that.
Got a question.
Yes.
Is 401k IRAs, are they PNC? And is workers' compensation PNC?
Workers' compensation is PNC. 401ks are either in the life, actually the annuity space, or they're in the financial space. So you have to have a series license. There are some products you can do with just your life insurance license. So it's specifically annuity or the money management space, which we're not covering right now. Yes, Ross.
Can we eventually dive into like bankers? Is that something that we can eventually get into as well?
Bankers is a very tough distribution model. And the reason being is because of the rules and regulations that banks have to offer these types of products and services. So in the insurance world, and this is going to be like the 10,000 foot thing, and we can maybe have another conversation another time. But there is, so independent insurance distribution, and then there is actually something called the bank channel. And places like Merrill Lynch, Chase Private Wealth, and Wyndham, that's a hotel. Wyndham. What's the one that starts? There's a bunch of banks and insurance companies actually have products designed specifically only for the bank channel that insurance agents and independent agents don't even get access to. You have to be a bank to get access to those products and services. So it's not typically a field that we're ever in. I've never delved into the bank channel. If you find a smaller, like independently owned bank, there's a potential opportunity. But if you talk to any big name brand bank, there's too much red tape, and they have means and the ability to get access to that through different products and services that we can't even offer them.
I have another question. Because a lot of the people I've met, they call themselves financial advisors.
Yeah.
And they work on the investment side, and they also deal a lot with life and annuity. Those things start to kind of blend and bleed together.
Yes. So maybe that'll be another whole session, because financial advisors still fit within this model, where you can replace agent with financial advisor, basically. The only difference being is that they're also then offering money management. But most of them are still able to offer these types of products and services as well, and get contracted with it and be able to offer that to their clients. So don't be afraid to talk to financial advisors as well. This works the same way for the most part. There's some nuance to it. I won't go through that right now because it's a longer conversation. But we can offer and get financial advisors contracted with these insurance carriers, depending on where they're at. Like, just as an example, because they're a big shop, Merrill Lynch can't offer these products, but they partner with agents that do offer these products, because they are not allowed to get contracted and earn commission off of offering fixed products, and things like this. Morgan Stanley, again, not able to offer, those financial advisors not able to offer these products and services. But if you have an independent person, so like a One America guy, or you have Brookstone Capital Management or Horton, or there's a bunch of other places that are independent financial advisors. Basically, they can still choose to use these products and services as well.
If I could piggyback on that, Nathan.
Yep.
Pardon me. Nathan did make reference to the length of time I have been in this profession, and I consider it a profession and a career. And I make that distinction because Nathan has direct knowledge of this, and I know this from my experiences. What this addresses, and what you're going to find, I feel, is that your conversation with somebody who is really active in this profession, your conversation on this diagram is really, to me, I feel, is going to be abbreviated. Where it really is going to come into play, and your learning curve as you are acquiring your clientele, which is your financial advisor, your broker, your life agent, your property and casualty agent, is there are people out there, and what our profession lends itself to, which I'm not high on at all, is people can get their license, their state license to represent fixed products, and do it on a part-time basis. So they're supplementing other income. This is where this diagram becomes really effective, because they do not know what is out there in the way of availability of carriers and the availability of their compensation. That to me, if I'm, interject Nathan, if I'm off track on here,
No, you're
but
good.
that to me where it really becomes a significant part of your talk.
Yeah, absolutely. And I'll piggyback off that. I'll dovetail, to use a different word, to off that in a second. But really quick to address the question I was asking earlier. So just so that everyone understands where you fit, you guys are really like right here. Like you're in between all these insurance brokers, and you're supporting the agency owner and the agents. You're the gateway to all of these different aspects. So that's where your role fits. And what you're doing then is where you're earning money is you're earning money off of the spread. So you're getting some of this between the agency owner and the agent and yourself, basically. And sometimes there's not an agency owner in the mix. Sometimes it's just an agent. But hopefully that helps you guys understand what that looks like. So Debbie, I'm going to put you on the spot for a second. But just as a question, I know this was a lot, but does this on some level help understand where you fit and kind of what all the stuff that's out there and breaking apart what we talked about a little bit yesterday?
Extremely helpful.
Good. Jake, helpful for you too?
Yeah.
G, hopefully it is for you too. You understand, where you're at and what you're doing. But the biggest thing for you is I know I just expressed it, but again, this is where you're at. You are the gateway to all of these different products and services. This is extremely important to understand because without you in this mix and helping them understand where to go to find these different things and that you can help them do that, then they're going to go some other place and maybe they're going to be disappointed. Everyone on here has relationship management skills. You all are likable people. You're Jake, leave it alone. And that's going to be an important concept within what you're doing is you're here to help them and support them in any way that you can. And even if you don't understand everything, you know where to get the answer from. And that's going to be, that's what's going to be your saving grace every single time is, hey, I may not know the answer to that right now, but I know where I can go find it. Give me a little bit and I'll go get the answer for you so that you can do what you need to do, Mr. or Mrs. Agent, and go sell policies. So the last thing I was going to mention to dovetail off of what Jeff said about understanding different compensation, to add a layer of confusion on this, is there are also different IMOs, FMOs, agencies that offer different compensation. So I'm going to use it within the life and annuity field first, because there's a lot of spread and there's a lot of different commission levels that you can get. But as an example, this is what we call, like, this level is called street level. Street level means if I call up the carrier and ask for a contract, this is what they're going to give me depending on the carrier, the insurance carrier, and the product that I'm selling. That's why there's a range. So if I'm selling a 10-year term, maybe I'm only getting 80%. If I'm selling an IUL, maybe I'm getting 90%. If I sell a 30-year term, maybe I'm getting 100%. But there are organizations that are out there. So I'm going to use a captive agency model. So State Farm, Ross. I don't know if you wrote any life insurance, but do you know what, did they tell you what your commission level was for life insurance?
Yes, they did. It was 15%.
15%. Yes.
Terrible business model.
Oh gosh, absolutely. I actually, I've heard from other people that the agency owner was only giving them 10%.
I mean, my guy was a rookie, so maybe I don't know.
Anyways, so that's the reason I picked on State Farm is because State Farm is the lowest life insurance commission level I've ever seen, ever. So, but there's other organizations. So State Farm, 15%. Then you have other places like WFG, PHP, Primerica. So the three-letter words, the three-letter organizations, they'll typically start an agent off at like 25 to 35%. Now, just so that everyone understands, the spread did not change. There is still commission being earned off that. So the agency owner, now agency owner and State Farm is going to be different. But so we even eliminate that, but the carrier is still earning money off selling those products. And it's similar products. State Farm's products are in the life insurance field, do not compare to the independent channel at all, but there is still a commission being earned and State Farm is still making money off that. They are just deciding, because of all the support and the brand that they're offering, that agents and agency owners do not deserve to get that commission. Same thing with these organizations, because they're trying to recruit and do network marketing and things like that for the top people to earn money, there has to be enough spread so the company can do stuff. So World Financial Group, for example, is still earning the 130 to 150%. But the agents, when they first start off, you can get promotions. The agents are still starting off getting 25 to 35% commission. So, and then the agency owner in this case, so instead of getting 25 to 35, they're at, let's say 65 to 82% is one of the top levels I've seen, 85%. And there's other things that you can get. There's bonuses and things like that. But the really awesome bonuses because there's so much spread. So understand that when you're talking to different people. So if you talk to a State Farm rep, and I use a direct example, one of the agents that we brought on a few years ago at this point, he was a State Farm rep and been there for a little over 5 years. He was doing $50,000 of life insurance every year. His commission level was only 10%. He was making $5,000 from selling $50,000 of life insurance. He came over here, wrote $50,000 of life insurance with better products, and made about $45,000. That's a big deal. That's an easy value proposition. You're doing lots of life insurance. Wow, State Farm agency owner. Have you ever thought about going to the independent channel? Just so you know, well, not just so you know, out of curiosity, do you know what independent agents get paid off of life insurance? And they'll be like, I think like 30, 40%. And like, no, they get paid like anywhere between 80 to 100%. How would you like to put more money in your pocket? So there's some things that you can do that might catch their attention and catch their eye. As another thing to address too, so this 130, 150%, just so everyone understands, is specifically for life insurance. The other side of it, of the annuity side, we're not going to get into this too crazy, but on the top end, usually anywhere between like 7. Hold on. 7 to like 11% on top end. I won't get into how that works right now, but just understand that that works a little bit. Don't tell someone that on an annuity, they're going to get 100% commission level. That will make no sense to people.
So one annuity and then you're done.
Yeah, absolutely. That would be, we'd be getting lots of agents on, so that was the case. And then street level for agents is typically on annuities is between like, depending on the products, 3 to 7%. All right.
Click, click, clickety, click.
Yeah, I know. So that was a lot. I'm gonna I'll clean this up and get rid of the diagrams. I am gonna put like numbers on there, but I'll make it pretty before I share it with everyone. Any other questions or comments about this diagram? Cool. Well, I'm gonna do some things, like I said, that will help out and put the numbers on there, make it pretty so everyone can utilize, and then I'll create it as a PDF. If anyone does want to get, I don't even know how to pronounce it, Miro or Miro, I can share this to you and just send it to you directly, and you can play around with it. But I'll have it as a PDF so that you guys can just take it and you can print it out if you want to and draw on it. You can use like Adobe and edit it and draw things on it as well, so that you can show someone how that works. But it is 10:38. I'm going to shut this part down, and then just a couple other things that we have going on event wise, and then we'll wrap up in the next few minutes. But again, any other questions that anybody has about anything we went over? Great, you guys are making it easy. All right, so as always, Thursdays, same time next week, we'll be on here. So next week will be a carrier. It should be Symetra. They're going to confirm with me in a little while.
But can't we have Jake back from a theme?
Stop it. Stop it. Just stop. Anyways, we'll have hopefully Symetra on next week. The other piece then is starting not next week, but the 17th. We are going to start doing agent facing events. So what this means for everyone, and I'm going to get the calendar out by the end of the week. I'll have some of the calendar out, but every other week on Wednesdays at 11 a.m. we are going to be start to do an agent facing webinar, which means we will have a registration created for it. If you guys are talking to agents and you're trying to get them on board and see some information, this is something that we call event-based marketing. So it makes it super simple. So you call up an agent, or you've already talked to the agent and they're still not working with you yet, or they're an agent and they are working with you. This is a value for them that we're going to put on these webinars and record them and put them in, a place where they can see them in the future. But agents like hearing from the carriers directly. This will be a great opportunity for everyone to utilize to say, hey, we have so-and-so carrier coming out. Sometimes we're going to have even like people that are high up in the food chain at carriers. So one of the people that we'll have is Joe Voss. I got to figure out the date for him yet, but Joe Voss is the vice president of AIG. Like there's only one person higher than him. And his experience is amazing within the industry. So people like that, other people know within the industry. And so if you say, hey, we're going to have, Joe at our, at this event, then that's something that people pique their interest to because they want to hear what the people like Joe have to say. So we're putting that together. Just mark, like I said, it'll be on the event calendar in the band by the end of the week, but every other week starting on the 17th. So the 17th, and then the next one won't be till December, and then the first week of December, then the third week of December. We miss all the holidays, so there's no one that we have to take off. But that'll be exciting. I will get registration out to everyone as well, because we'll build a website for it and kind of like a click funnel for each event. And you can have them register on there. And then just so that you know, when they register once, we're going to have it set up where it's automated, where they don't have to register again. And it's going to send them reminders for the next event that's upcoming. So if you can get them on board to once register, then they will be registering automatically registered for the other ones and get reminders for it as well. You might want to touch base with them anyways, but that's how it works. Anything else before we wrap up? Since this is our time that we get to talk together. We don't always go till 11 o'clock Central Standard Time for those that are in different time zones. All right. Well, I will get that information out to everyone. I will also get this PDF. I'm going to clean it up and send it out in the band by tomorrow as well. And other than that, you all have a great rest of the day. For everyone on the Praxis team, I will talk to you guys at the end of the day. And Jason will jump on shortly. All right. Talk to you soon. This recording will be in the Praxis ACG YouTube channel by the end of the day as well. Bye, everyone.
Okay, bye.
Thanks, Jay.